Hey, good afternoon, everybody. So I thought really quick what I would do is a trade recap from today's market, as several of you have reached out to me asking about price levels. So a couple things real quick. Remember, we are always going to start on the daily time frame. Now, mind you, that this green candle did not happen, but we had a gap. So we are measuring the wick low to this wick high between the 2 days to show that we had a gap. If I then go down to a 4-hour time frame and I take a look and I'm going to ask myself, is there anything different that I see or that I want to be cognizant of? Well, a couple things. One, I understand that we are now back somewhat in an uptrend, right, on a 1-hour time frame. We are starting to close higher, even though the last couple of days have been actually brutal. The next thing that I want to look at is, where did we have a low? Well, we had a low on this candle right here from Monday, August 5th. So I'm going to want to understand, where are the absolute lows in the market? You know, there's actually another low right here at 507, but 510 was this candle low. We have a candle low right here that I want to be cognizant of at 514.84. Okay. Then what I'm going to do is I'm going to go down a little bit more granular and I'm going to look and see what other levels do I want to be cognizant of. Well, we already captured this candle low. We have this candle low before we pushed higher. Now what I want to look for are areas where there is going to be overall strong support. And where am I seeing that? If you look at where we had this red candle, then a green basing candle before we pushed higher up into this gap zone before we moved down, the one thing that you will note is that we came right back down to liquidity or support down here at 514. So this was yesterday's entire trading day, right? We opened up, we pushed all the way up, we came down, and then this was your overnight session. So what do I know? The market came back down to liquidity. So I know that there is a strong amount of buyers or demand right here at this level, okay? So I'm going to go ahead and mark that on the charts. We know that there's sellers up here. I mean, I don't even have to mark this. You could if you choose to, but you don't need to mark this candle high before we rejected. Why? Because it's the gap. You could also see the pre-market, we rejected it. We tried to push up to it, and what happened? We rejected lower. So what did I have? I have a pre-market low candle right here, 518.50. 518.50, again, a nice odd round number. As weird as that sounds, right? But this is your level that if we can't hold this, then we are probably going down to the next stage of liquidity, which was all the way down here, right? And we had that marked out. So we're good. We're ready to go. We already know that we had support. We had support before we pushed higher. Now, what happened today? So this is going to be the market open. What I'm going to do is I'm going to go ahead and I'm going to show this to you on a 1-minute time frame. And this is where most people got stopped out of the trade. And here's why. So what you did is some of you took a break on this candle right here to the downside. Well, it's a 1 minute. You didn't get a confirmation that it was going to retouch and push lower. It retouched, it moved higher. Retouched here, moved higher. Now, if you decided that you were going to go on the second candle to break lower, I would buy that, okay? So you've reconfirmed, you're failing the level again, but then what happened? They immediately pushed it right back up above the level with some increased volume. So look at the size of the candle. This candle is bigger than this one, this one, this one, this one, this one. This is a powerful reversal candle. And they did it on some decent volume, right? So when you look at the volume of this candle, there's only 2 candles that are really higher than this one and this one. This one I somewhat ignore because it's the market open and it's the rebalancing of all the funds from the prior night. But when you look at it, it does have some merit, okay? So why did this not work? Well, remember, when you're looking at my screens, I have the 1 minute down here, an active trader, and then the 5 minute up here. So if you were to look at this on the 5-minute time frame, here's completely why the trade never worked out. The 1-minute candle was able to push below, retest, come back down. What did the 5-minute candle do? Closed way above the level. That was your indicator, especially on this green bullish engulfing candle, that this market was now going to chase liquidity to the upside and potentially to the gap fill, which it looks like we are about to fill this gap as I'm recording this. So the other thing that you had to take into knowledge is the overall global markets, right? And that's what set off this whole chain reaction 2 days ago was Japan, right? The carry trade. I sent out an email on it. I kind of explained what it was, but if you didn't look to see that Japan closed up 11% last night, then this would have been a really hard trade to manage to the downside. Why? Because Japan got a huge relief rally where it made up 50% of its losses. So guess what do you think the United States is going to do? It's going to get a relief trade, bounce to the upside as well. And what is it doing? We closed down 3% yesterday. Right now we're up 2%. Here is your relief rally. Does it mean that this holds? No, not necessarily. I don't think we're out of the woods. We just broke the gap. So now the gap is broke. This goes away, right? And now what are we going to do? We are going to now think about, are we looking at this back to the upside, right? With potential for tomorrow and the rest of the week. I think you got to give it some time to see how this plays out. But my first level of overall resistance is going to be right about here. The pivot, right? And then once we failed it, we are now coming right back to it, which is the top of the gap. And then where would I start to look to next? Right up here. Why here? Well, this is where we bounced higher, flushed it, came up, rejected, came up, rejected, flush lower. So here's your new levels. Whoop, let me get rid of that. Here's my new levels that I'm going to be watching to see how the market closes today and how the market is going to function tomorrow. We're now going to be trading between 528.90 and 533.06, right? Even if I were to go and look at it on a higher time frame, does that look pretty decent to me? We still have, the gap is closed, it's filled. This was pushing up, down. This is the level I want to now watch. So I'm not going to go long tomorrow unless we can break and hold above this. If we don't break and hold above this, where do I think we're going back to? Right back to the level that I had here where we rejected, we then rejected it, and then used it as support. And now what I would love to see is us come back down to 523.61 in order to move higher. So with that, I hope this helps. One other little bit of advice that I'm going to recommend to all of you is make sure that you are staying at the money with your contracts. I know they're more expensive. The good news is volatility is back down to 24, so it's very manageable. We're no longer at 60. We're no longer at 40, but you need to be staying at the money or one out of the money. Do not be going 2 and 3 positions out because you're just going to get burned on premium and you're going to regret it. So with that, hopefully this helps. And if you have any questions, just shoot them back over and I'm happy to answer them. We'll talk to y'all soon. Take care.